Hello everyone, John Hyaden here with a daily revision. Let us begin. Before we start, I suggest you stop the video, read the general risk warning. It is very important to understand the risks under trading. Upcoming events. All events are taking place in GMT hours. I recommend you write the events down in your calendar so you would be able to trade and notice them before and after the announcement. After all eyes were added last week to the US unemployment and non-farm payrolls, this week focus will be more on other economics around the world. Starting with Europe, the GDP or the pound will face high volatility today due to its own unemployment rate, and speech from the Bank of England, which will mainly discuss monetary policies issues. Later on, Mario Draghi, the president of the European Central Bank, will speak about his future plans for the Europe economy, including Hyaden plans to stimulate the economy in order to lower Europe unemployment rate and many other issues that slow down the economies overseas. US market, both pressure from buyers and sellers says sideways movement in the past few days. From one hand, we can see heavy sellers reacting upon the increasing expectation for higher interest rate next month due to the successful reports last Friday. However, on the other hand, investors tend to fight back, especially after long upward trend of almost 2 months. Furthermore, usually at the end of the year, we see rally upward. Unfortunately, it might not be the case, as using the technical analysis approach, we can see some very heavy big red candles representing big money flowing out against small green candles which struggle to reach higher highs. In conclusion, the fear from higher interest rate among investors is pretty obvious, and ignoring the hints from last week's reports is not a good idea. Focus on short-term trades rather than longer ones. According to analysts, as closer we get to the interest rate, the greater the chances we will see a drop downward, so trade in favor with the sellers. As you can see below, this is the SP 500 daily chart. We see this big red candle and against one or two green candle trying to reach that trend line one more time, maybe to break it, but the strength now is with the sellers. Commodities, the gold standing still in the last few days after I remind you that we saw a major downward rally of almost 1 month downward, reaching almost 3 months low already. The gold now showing signs of sideways until things will get clearer, since from one aspect the interest rate concern made the commodity to drop. However, China's poor reports hint on possible intervention from China to stimulate the economy, or in other words, greater chances for the gold to recover. As day traders, we make money out of strong moves. Whenever an asset is not showing any direction, it is better to leave it alone until things get clearer. As you can see below, this is the gold's daily chart with a drop, a rally downward, and in the past few days it shows sideways movement, and from here it might go a little bit higher, but at the end of the day the trend is your friend and you need to go in favor with the sellers. Crude oil, the entire influence on the crude oil in the past few months now is the global surplus. Any poor data from API weekly crude oil or oil inventories from the US or other news related to the low prices of crude oil like OPEC meetings that show cut in production stimulate the price of oil to go higher. Whenever things like yesterday data supporting the idea of another build of stockpiles in the US, the oil has no chance to recover. Using technical analysis, the oil is sitting on a very strong support. Although the bad news for the commodity yesterday, the price did not drop lower from this area since it respects its strength. This level right now is on a $44 per barrel. Any breakout will lead to major drops for the oil. In conclusion, keep a close eye on the crude oil as great trading opportunities are ahead of us. Both call and put option can be made for the short term, but for the longer ones, according to analysts, we should see at the beginning of 2016 higher highs for the crude oil. Forex dollar index still showing its strength against all other currencies. This week reports around the world may set a different rhythm for the dollar compared with the other currencies, but for now the upward trend is continuing at least until the next resistance. And you can see it here in the graph below. We broke the last resistance, and after this big green candle we have a struggle of 2 or 3 days, but at the end of the idea, same as here. After a struggle, sideways movement, we moved higher with the trend. That's it for today. If you guys have any question for me, please contact me on binaryoptionsreview@gmail.com, and of course visit Ken Davis' blog on www.binaryoptionsreviews.net. See you again tomorrow.